KB Financial Group, the parent company of KB Kookmin Bank, has successfully conducted a full lifecycle test of a won-denominated stablecoin. The test covered every stage from issuance to offline payments, merchant settlement, and overseas remittance. KB Kookmin Bank is South Korea's largest bank, with over 584.9 trillion won in total assets, according to its own factbook. This real-world experiment took place at a Holly's coffee kiosk in Seoul, where customers could pay using a QR code without needing to download a separate cryptocurrency wallet. The checkout process remained seamless for users, while the back-end payment settlement was handled via blockchain technology. On the international side, the test involved converting a won stablecoin into a US dollar stablecoin and sending it to a bank account in Vietnam. The entire transfer was completed in under 3 minutes, a significant improvement in speed compared to traditional methods. A spokesperson from Kaya Chain, the blockchain platform supporting the test, stated that the transaction cost was reduced by 87% compared to a similar transfer made through the SWIFT network. This is a major development in the realm of international remittances, where cost and speed are critical factors. KB Kookmin has indicated its intention to launch commercial stablecoin services once South Korea's digital asset legislation is finalized. The Democratic Party has proposed a Digital Asset Basic Act aimed at establishing a legal framework for digital assets, covering their issuance, trading, custody, and supervision. However, the bill has faced delays due to disagreements among regulators. The Bank of Korea has insisted that only banks holding at least 51% ownership should be authorized too. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Issue stablecoins, a stance that the Financial Services Commission has criticized as potentially stifling innovation. This regulatory debate highlights the broader uncertainty surrounding stablecoin adoption in the country. Meanwhile, the competitive landscape is evolving. 8 other entities are reportedly working on similar stablecoin initiatives, suggesting growing interest in blockchain-based financial solutions across the region. The success of KB Kookmin's pilot indicates that stablecoins could become a viable alternative to traditional cross-border payment systems. The combination of reduced fees and faster transactions could appeal to both consumers and businesses, especially in international remittance markets. However, the regulatory environment will play a crucial role in determining how quickly these services can be rolled out. If the Bank of Korea's ownership requirement is enforced, it could limit the number of entities allowed to issue stablecoins, potentially reducing competition and slowing innovation. The Financial Services Commission's concerns suggest that a compromise may be possible, but the final shape of the Digital Asset Basic Act will be key. The next important signal to watch is the finalization of this legislation and how it balances the interests of stability and innovation. If passed in its current form, the law could shape the future of stablecoin adoption in South Korea. If it is delayed further, it could slow progress in the sector. The QR code payment model, used in the test, is a notable innovation that could help make stablecoins more accessible to the general public. By integrating blockchain technology into familiar payment systems, the bank has demonstrated how digital assets can coexist with traditional financial processes. The Clayton Network, which supported the test, is a major player in South Korea's blockchain ecosystem and could play a significant role in future stablecoin deployments. The broader implications of this test include the potential for increased efficiency in cross-border transactions and a gradual shift toward digital asset-based financial systems. However, the regulatory path remains uncertain, and the ongoing debate between regulators reflects the tension between maintaining financial stability and encouraging technological innovation. The final law will determine who can issue stablecoins and under what conditions. If the ownership requirements are strict, it could lead to a market dominated by a few large institutions. If the rules are more flexible, it could open the door for a wider range of participants and foster a more competitive and innovative market. The pilot also highlights the potential of blockchain to streamline. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Back-end financial processes without disrupting the user experience. The ability to use a QR code for payments while settling transactions on a blockchain is a step toward making digital assets more user-friendly and practical for everyday use. The cost savings and speed of blockchain transfers could have a significant impact on remittance markets, particularly in developing economies where traditional banking services may be limited. The success of this test could encourage more financial institutions to explore blockchain solutions and contribute to the growth of a digital financial ecosystem in South Korea and beyond. The next signal to watch is not just the finalization of the Digital Asset Basic Act, but also any changes to the ownership requirements for stablecoin issuers. These developments will determine the pace and direction of stablecoin adoption in the region.